How much hard work this require? Let me tell you, zero. How many adjustments have you done? Zero. The market has been trending crazy and we get something like this. This is the essence of options trading. The market is not an enemy, but the lack of preparation is. But not to worry, today I'm gonna sort this issue out for you once and for all. When you're going to learn weekly option selling, one shot, one kill strategy for people who do not want to adjust a lot, who really are busy. I don't need to tell you that you need to watch this video till the very end if you really want to excel, because towards the end, I'm gonna tell you advanced tricks which you're not gonna find anywhere, which will have a real solid and positive impact on your trading. Now, theory before action. First, we're gonna make an iron fly. All of you know how to make an iron fly, right? Then we gotta go out of the money. We got to buy options and then we got to sell it and we got to buy it again. It's very easy. In next 2 minutes, it will be crystal clear for you. You can take a screenshot of this if you like to. Now it's time for action. So here we are on an option simulator and we're gonna make a weekly strategy live right in front of you. Now here we have to pick the next week expiry. Step number one was what? Step number one is that we have to create an iron fly. Iron fly, I'm sure everybody know it. If you don't know, you can simply just sell a straddle at the money and then you have to buy a call and the put. Very easy, nothing fancy at all, right? So we sold this because this is at the money and then we go out of the money around 200 points and then we buy the call and then we buy the put. Very easy as it can be. We sell, we buy, and this is our iron fly. Looks something like this. I'm sure all of you know how to make an iron fly. Looks very much familiar, right? Now, a lot of people trade iron fly day in and day out, working professionals. Really? You want to adjust like 4 times in a week? Do you have that much time to adjust? Also, iron fly has a lot of disadvantages. But today we're going to talk about something else. Once we are done with iron fly, then what we're going to do is we're going to remain at the same weekly expiry. This is around 7 days out. Now what we have to do, we have to look forward to buy a call which is roughly 500 points out of the money, right? If it is a round number like you see here, 23,000, that is better. So we buy this 500 points out. Good. Now next thing, we got to buy a put which is out of the money and then we buy it. How easy? Iron fly and you longed 500 points, really out, call and put. Now once this is done, remember that you bought a 23,000 call. Okay, now what we have to do is that we have to sell the next strike. So probably you can sell this or you could sell this, and here you could sell 5. So yes, you will be collecting some amount of credit. Now here as well, what do we do is we have bought 22,000 put. You know this already. Now we have to sell this and we got to sell this 5 lot. And this is the basic structure of our one shot, one kill strategy. And this is how this looks at the moment. Now here, certain things should really pop out for you in front of the screen. Number one, you get a really massive range when it comes to weekly options. I mean, have a look at this. Point number one. Point number two, you see that there are 2 peaks towards the end. This is for the last day when the gamma risk is very high. It's high risk for people who just know how to sell options. But when you buy, gamma works in your favor. Beautiful, right? That's the reason why you find that the probability of profit is incredibly high, shooting up to the roof. First, these 4 legs are iron fly, and then we longed, and then we shot it. It's very, very easy. Each and every one of you who's watching this video should be very easy to understand, right? Now, a lot of you may ask me in the comment section how you can reduce the margins. Reducing the margin is very easy. All you got to do is simply just buy and really out of the money call and puts, and your margin gonna get reduced. Boom. Just like that. Very easy. Now, this is the basic structure of how one shot, one kill strategy look. Everything looks to be in our favor. But what if market trends, how this is going to perform, how this is going to perform when the market is just not going anywhere. We're gonna see both the situations around it. Very, very interesting. Let's get up. You're gonna learn something good. So here we are on an option simulator. First, we're going to have an easy example, and then we're going to go to advanced and then even more advanced. But it's very easy to do. Number one thing, you all know what to do. You got to create an iron fly. Very easy. All of you know how to make it. We sell a straddle, easy. After that, what do? We go out of the money around 200 points and we look forward to buy 2 legs of it. Obviously, iron fly looks something like this. Of course, very easy thing to do. After this, what do we have to do? We can go roughly 500 points out of the money, which comes out to be here, right? Around 23,000 market is. So we long this, easy. And then what do? Short the next strike. So you long it and you short it. It's just that you are doing it, you're longing 1 and you shorting 5 because you want to collect an extra credit, obviously, right? Now this is done. Now same, we're going to do it on the put side. This green line is at the money, as you know already, all of you. What do? Buy out of the money. We are buying 1 and we are selling how much? We are selling 5, of course, and we got to sell and we are selling 5, and this is how it looks. Our 1 shot 1 kill weekly strategy, this is how it looks. But now you want to reduce our margin as well. So why don't we buy a really economical out of the money call or put, and the margin is going to reduce down like anything. So let's do that. So we're going to option chain now. The last and the final step. This is optional and this is for people who really want to decrease their margins. So go really out, buy a call. Roughly around 5 lots, something like that. So that margin requirement really come down without compromising on the range. That is how smartly we can do something like this. And here we see the premium is very tiny, 2.55. We can buy it. This is done. And now this is how this looks. Obviously, there is no difference in how the payoff looks right now. Remember, it is weekly options. So weekly options has really high, solid theta decay. The overnight decay is immense. It's really good and fruitful for us. That is what the professional trading is all about. Now imagine if you are in office and you have something like this which has a long range, and then you wait a little. So we gone to Monday now, and what do we see is that the strategy is not giving you profit yet, and that is absolutely fine. We go ahead one more day, and then what do we see is that in just a matter of 1 day we made approximately 58.46. In terms of ROI, this roughly translates to around 1.25 1.3% ROI in 2 days. Solid, right? Definitely. And I see people doing hit and trial all the time, trying 100 things and then try to figure out that 99 of them don't work. That's why I tell you it's much better to have something solid. It saves time, it saves energy, and very importantly, it saves your capital as well. Now here, what do you see? Wednesday have come, and then the return is obviously extremely high. Really high return, right? I mean, close to around 1.82% of an ROI when you do something like this. Now, this is when the market wasn't really trending. Market from here came over here. So sort of a trending around 500 pointer move in a weekly series, which is obviously slightly above than average. One-way move I'm talking about, but I'm sure you want to see a really trending market move, a really brutal move. In that situation, what happens? Nothing gonna happen. I'm gonna explain you. So here we are on an option simulator, as you can see right now, 13th of December. The reason why I'm picking this, it's obvious. Now here, this one candle which you see, this is 1 week. You see such a brutal and fast move. Nifty moved in a week approximately 1200 points, around 5% sharp cut. VIX is rising, everything is going crazy, but we plan to make our strategy something similar over here. It will be really interesting, isn't it? Let's see what happens here. And I've been seeing a lot of long range strategies these days into the markets, and I think to myself, these kind of strategies, even better than that, I have it back in my yard. So that is not a problem. I can create something much better and probably give it to you guys. Why? Because I know that you've been asking this a lot in the comment section. You've been sharing all the love, you've been commenting, you've been telling me that you want to learn something which requires no adjustment over and over again. So I have to make something for you guys. Now here we go. You sell a straddle. I don't need to tell you. Probably you could just fast forward this. Now here we go, and we made an iron fly, simple. Now next what we got to do is, right, you're paying attention, yes, so we look forward to buy out of the money call, right, round figure is even better. And after that we look forward to sell the next strike, or maybe next to next, completely depends on you. And we look forward to sell 5. And obviously please don't shy away. I mean, you can sell probably even 7 if you like to, you can sell 4 if you like to. But the most important thing is that we have to sell more than what do we buy. Now I have bought this, so which strike I'm gonna sell? Yes, definitely I'm gonna sell this. How easy is this? And we're gonna sell 5 of it. And this is the basic structure of our strategy is absolutely ready. And aren't you enjoying this video? Definitely you are. And just to tell you that you can reduce your margins very, very fast, what we got to do, we got to buy a very cheap economical sort of a call or put if you like to. I mean, you can just simply buy this, a 2 rupee option in a weekly, which is always going to be so far and further away. Here as well, we can do something like this. We could probably just buy this and the margin get reduced. Obviously, the closer you buy, the more margin benefit you're going to have. And don't worry about this. It's just for the, just to reduce the margin. Now let's see what's going to happen with this when market starts to move brutally on one side. How are we going to do in here? So let's see 1 day into the trade, and in 1 day we look to see some amount of profit. It's not great, but at least it's giving us some amount of profit. Remember the reason for the peak. I hope that you were paying attention at the beginning of the video. I told you that this peak really comes pretty handy because what happens on Wednesday, on Thursday, before the market expired, the gamma go high. That really is to make option sellers in trouble. But here when you buy this, it is definitely going to help you a lot. And I have even better tricks up my sleeves, which I'm going to tell you towards the end of the video. Now here market has really moved and Wednesday have come. And what you see here is you are making some decent amount of profit. How much? Roughly around 0.5% of an ROI over here. And if you wait a little, because now you know the trending move can just come, and here what you see is that we are doing very, very good, around 0.6, 0.7% of an ROI. One can definitely look to book it before it may just test people who are super greedy and want to make 10% in a week, which is never going to happen anyways. And now we have come towards the end. We have really come towards the end of an expiry. You are busy in your office, probably in your meeting. And here what do we see is that we are making good amount of profit. Now max to max, what can happen? Probably is going to give you a loss. Probably is going to take away the profit, which is giving you. That is absolutely okay. If it takes away, it takes away. It's absolutely fine for you. Now here we go around 3:30 p.m. I know it's very, very interesting, isn't it? So here what you see is that market has really gone down and market is coming really towards the peak of it. And still we are making an extremely handsome ROI here. Now we are not done yet. I have to add some more points to this. Let's learn about this. VIP points to remember. Now the first thing which you absolutely must remember is if trading feels like a gamble, you're not doing a professional approach towards trading. One thing I must tell you, that don't get cocky and start trading stocks or events. Now this is not for stocks, please, because stocks can give you circuit down, circuit up. You don't want to get stuck in that, right? So definitely not for stocks. Rule to remember, higher the wicks, better the range. So don't try to do this kind of strategy. The VIX is really down, probably like trading around 10, 11. So you can trade it, but it's just that your risk is going to be high. So if you're okay with that, then it's fine. Higher the VIX, the better it's going to be. And I want to give you hint of adjustments. Now, a lot of professional traders, fund managers also watch my videos, and they do approach and they do like to learn more from me. Now here I want to give you the hint. Now suppose if market is moving one way and suppose market is really, really going down, a sharp cut market is happening. If that is happening, then your one side, suppose if market is going down, then you call 5 lots which you sold, those are already making money for you. and that's the margin is getting wasted there, right? If market is going down. Now what you can do is you can probably square off the entire 5 calls which you sold, right? And the buy, you can completely sell it, you can exit it, so your margin become free now, right? And if market is going down, then your put is in trouble. So calculate how much premium your put is losing and try to roll your puts further down. The most important question is, from where you're going to get the capital. Your capital is already freed from the call side, so that capital will come in handy, and now you can increase your range even more. If I try to explain, you probably will take me another 15 minutes to tell you, but I'm sure if you're an advanced trader, you got it. Haven't you got it? If you've been watching my videos, I'm sure you get it. So you can even go one step ahead than what you already doing. Handling iron fly, pro tip number 1 for advanced traders. Now one more tip, because today I'm in full mood to teach you something solid. Now, why don't you trade iron fly just as an independent strategy? That is something which definitely one can do. And if things start to go completely against you, even if you do not know much of an adjustment, you can always take an easy way out, and that is you completely do a hard exit. And that is how you can completely cover your positions. You can always do that. The risk should remain in our control at all time. Obviously, a much better than what the usual strategies are, gives you a lot of peace of mind, probability of profit, the range, etc. Everything is super duper high, and that's how it should be. And that's why I say hit and trial way of trading should be stopping today. Right guys, so I'm sure you must have enjoyed the video, and thanks for commenting and letting me know that you do appreciate such kind of advanced concepts, adjustments, tricks, and you want to make your trading even better. I'm more than happy to present it to you, and thanks for watching. And like I always say, you are going to do so well in trading, you will surprise everyone. I wish you all the best. Bye-bye.